one thing that's been rising in the last little while is the Aussie dollar. It's back big time, baby. Well, the Reserve Bank, since it last week shocked markets by raising interest rates while the US Federal Reserve left them alone, our dollar's jumped to 4-month highs against the US dollar. It's even better against the Japanese yen and the Chinese yuan. So where to from here? Sean Callow is a senior currency strategist with Westpac and joins us now. Sean, always good to chat to you. The Aussie dollar, it's been on a chat. Is it really just about those interest rate differentials?
Look, a lot of it is for sure. There's no doubt that since the end of the pandemic, monetary policy settings, at least probably the first half of last year, it's been a game in currency markets to try to get on board whichever currency has the central bank that's tightening interest rates the most aggressively. So for a lot of that time, it's been the Federal Reserve. So the US dollar's been very strong. You mentioned the Japanese yen there. That's the dead opposite. They still haven't changed from the zero rate policy. But others have had their moments. The euro has been backed by the European Central Bank playing catch-up on interest rate rises. Right now, sterling's strong as well. But as you say, the RBA has joined in, particularly the May surprise and June again, delivering rate hikes that weren't fully priced into money markets by any means. And that's really a surefire way of boosting your currency.
Yeah, so one other aspect of this, we talk about the US dollar always, that's the currency in which we trade, and it's the one that we watch most closely. But the Chinese yuan is also important to Australia, and China started to stimulate its own economy. Now, that's boosted iron ore prices and clearly boosted the Australian dollar. Our terms of trade is also important when it comes to looking at the level of the dollar.
Yeah, that's right. So certainly the most fevered focus over the past 12 months has been interest rates, but as commodity prices are always very important for Australia. And we've been running very large trade surpluses for about 5 years or more now, which is really quite remarkable. So it's an unusually strong position for Australia. And as you say, for China, there's been a pickup there. Certainly have been periods this year where we've had commodity prices under pressure, iron ore, for example, well below $100. Now it's back to about $116. We've had the steps even today, a little bit of a rate cut, pretty small, admittedly, a rate cut in China. They're a bit wary of how far they cut rates given how high their debt levels are. But nevertheless, they're taking some action to stimulate the economy. And so when you've got that sort of that stimulus going on, the Aussie dollar is seen as benefiting more than just about any other currency. And meanwhile, the Chinese yuan has actually been pretty soft, and that helps their exports.
Just thinking about this, because the Aussie dollar has been under pressure for quite some time, but that's been largely the interest rate story. But given the fact that other nations around the world, the US in particular, seem likely to be pausing or at least looking at their interest rate settings into the future, Australia, it's forecast, has got 2 more rate rises to come. So again, this doesn't take any pressure off the Aussie dollar from rising even further potentially. I notice it's come off a bit today, but the pressure is there, isn't it?
Yeah, that's right. And we saw that in the minutes from the RBA today. They said that when in their review of foreign exchange, they said the Australian dollar had risen in response to their May rate hike when they were looking back. So they're aware of this. It's not something that they'll be concerned about. Obviously, if we get a stronger currency, it'll help keep a lid on import prices. And that was certainly a very big deal, particularly when petrol prices were going through the roof globally last year. So that does help them at the margin. So if we've got that interest rate support and strong commodities as well, then that's supportive for Australia. I think the dampener really comes from the fact that the Fed, as you say, on hold is most likely for the time being, but we're talking about rates that are already at 5% and might go higher. So there is still that yield pickup in the US dollar. So definitely a lot less weight on the Aussie from the interest rate side, but it still does offer a lower yield than at least the US dollar.
It's very odd. We've had strong commodity prices. We've had record balance of trade. We've had a current account surplus. In the old days, they were all things that would have sent the Aussie dollar to $1 US. So it's just not there now, is it?
No, it's right. Yeah, really, with these commodity prices, put them into your so-called fair value models, and they should be telling you you're at 80 cents or more. But really, it's that there's just been that weight of money into whoever's got a little bit more yield on offer.
I'll tell you about Sean Callow, Senior Currency Strategist with Westpac. Always good to chat to you, Sean, and many thanks for your time today.
You're welcome, Ross.